Neil Woodford becomes the man who could halve a £1,000 investment. The final valuation of the Woodford Equity Income Fund has revealed the magnitude of the biggest ever maximum drawdown in Neil Woodford's career, with investors who invested £1,000 at the fund's peak losing almost half their money so far, with further writedowns expected to come. The Financial Conduct Authority granted permission for the fund's wind-up to begin on the 18th of January, with investors due to get their first distribution payment on the 30th of January. The final valuation of the fund on the 17th of January cemented Woodford's most significant and prolonged maximum drawdown, highlighting how far the star fund manager has fallen since his Invesco days.Woodford, pictured, was dubbed the UK's answer to Warren Buffett when he stepped out on his own to open his boutique fund business, and was lauded in the press as the man who could turn a £1,000 investment into £25,000. In fact, the figure was actually higher for any investor that timed their entry and exit to the fund correctly. The man who turned £1,000 into £583, but for investors who bought Woodford Equity Income at launch and stuck with the fund all the way until the suspension, Woodford will be remembered as the man who turned £1,000 into £794, thanks to the 20.6% losses in the fund between launch in June 2014 and Woodford handing over the reins this month. The UK all companies sector has returned 44.1% over the same period, while the FTSE All Share has risen 43.2%. The losses are twice as high for investors who bought Woodford Equity Income at its peak.Punters, who backed the fund in June 2017 and failed to sell out before its suspension, are currently sitting on a 41.7% loss, compared with the FTSE All Share's gain of 14.1%. Morningstar data shows. That follows a £150 million write-down at the fund's final valuation on the 17th of January, which delivered a further 5% hit to investors. Rather than growing these investors' saving pots, Woodford would have turned a £1,000 investment into £583, with further blows expected to come as the fund winds down. We are right in the midst of the biggest drawdown period. Sadly, we are right in the midst of the biggest drawdown period, notes AJ Bell, head of active portfolios Ryan Hughes, who points to the further write-downs to come as BlackRock and PJT partners sell off the less liquid and unquoted parts of the portfolio. Hughes says it is a reminder that no manager has the recipe to outperform the market forever, and that skills are not always transferable into different parts of the market. Woodford Equity Income versus FTSE All Share during its worst drawdown period. Source: Morningstar. Blue line represents Woodford Equity Income and yellow line the FTSE All Share. FA Investments fund analyst Amy Kennedy notes the fund outperformed the FTSE All Share by a solid margin until November 2017, at which point the tide turned in a pretty substant. For more on this story, visit the news article link.